Home Depot stock, ticker symbol HD. This stock is down 6.5% on the year-to-date chart, mostly because of the earnings they just released. Home Depot beat on EPS by a small margin, but missed on revenue. For the next earnings, all 10 analysts expect a miss because of several reasons, one of them being a weaker outlook. People love Home Depot because of the dividends, and with reason. Right now, dividend yield is at 2.83%, and that's including the most recent dividend increase of 10%. But does this mean that Home Depot stock is a buy at current prices? Well, in this video I'm going to show you real quickly what Home Depot does. The most recent earnings report, the fundamental analysis, dividends, returns versus the S&P 500, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does Home Depot do? Home Depot is a retailer of home improvement products. It offers various products including building materials, home improvement supplies, hardware, electronical products, kitchen and bath products, flooring and paint products, appliance and lawn and indoor and outdoor garden products. If we dive in the recent earnings report, we see that net sales increased 0.3%, which is not a lot of course. And growth starts to slow down if you compare it with the fiscal year ended periods. Operating income is down 1.5%, mostly because of operating expenses that had an increase of 1.9%. The diluted earnings per share increased 2.8% year over year, which is very nice, mostly because of buying back shares. A very important metric for Home Depot is the customer transaction, average ticket and sales per retail square foot. The first number, customer transactions, decreased 6%, which kinda concerns me a bit. The average ticket increased 5.8%, so that's where the growth in net sales is coming from. The sales per retail square foot is nearly flat, which is kinda logical because of the other two numbers. For the 2023 outlook, it's expected that sales growth and comparable sales growth will be flat compared to 2022, and that's what most investors didn't like to see. Operating margin rate of approximately 14.5% and diluted earnings per share will face a decline of mid-single digits, which is of course concerning me a lot. The good part is that Home Depot increased the dividend with 10%. It's the 144th consecutive quarter of paying dividend, which is pretty impressive. It's expected that the DIY store market will grow annually by 2.63% from 2023 to 2028, which isn't a lot of course. These are slow growing companies. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Home Depot is a 324 billion market cap company, which makes them the largest DIY store company and also one of the bigger companies in the US. PE ratio is at 17, which could indicate that they are undervalued right now. Later in this video I will show you my 3 price targets for Home Depot, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 160 billion, and in this graph we see that revenue went up in the long run. During the lockdown periods revenue skyrocketed, and right now revenue is slowing down a bit, so that's something to keep in mind. Margins are going up in the long run, which is something that I really like to see. Home Depot online sales is increasing every year, and that could lead to higher margins. EPS is also going up in the long run, and it's really steady and consistent. This comforts me a lot. Price to sales ratio is at roughly 2 right now. Over a longer period of time it's increasing quite a bit. The current number doesn't concern me that much, but I would like to see a lower number here. Price to free cash flow is around 32 right now, which could indicate that they are overvalued based on this number. It's increasing quite a bit over a longer period of time, which is something that I don't like. Analysts expect EPS to increase at mid-single digits to high single digits in the coming years, which is pretty decent for this type of company. Revenue is expected to grow at low single digits in the coming years, which is also quite logical given the fact that since the world is opening more and more, people are spending less on their home improvements, which they did during the lockdown periods. Return on assets is sitting at 16%, which is above my 10% minimum, so this looks pretty good. Return on equity looks a bit odd, but I don't mind that much right now, since the most important number, return on invested capital, is sitting at 49.5%, which is an insane number. They really know how to invest their money. However, it's lower than the 5-year average, so that's something to keep in mind. But it has to be said that I expect the number to go down a little bit more, since the lockdown periods were a fluke in my opinion, for companies like Home Depot. So I don't mind that much, since it's still an insane number right now. Current ratio is at 1.39, which is very nice since it's below the 1.5 mark that I prefer. So this looks also quite good. But keep an eye on the recent increases. Total debt is sitting at 50 billion, and I prefer companies that can pay down at least a third of the total debt with the total cash position. Right now, total cash is sitting at 2.76 billion, so they can't pay down a big chunk of their total debt, which is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And in here we see that free cash flow is going up in the long run. Of course, during the lockdown period, free cash flow went up big time. Right now it's decreasing a bit, so that's something to keep your eye on. Shares outstanding is going down in the long run, which I really like of course, since this is very important to me. It means when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyway, dividend yield is sitting at 2.83%, which is pretty good. This includes the new 10% dividend increase. Annual payout is at $8.36 and payout ratio is at 46%. I prefer 50% or lower, so right now they have roughly 54% left in cash to buy back shares, pay down debt, open new stores and all other things. The payout ratio has increased quite a bit because free cash flow is decreasing. The 5-year growth rate is at 16%, which is really good, and they grew the dividends for 13 years in a row. Very impressive. Overall, a great looking dividend scorecard, but how about the historical returns? I decided to compare Home Depot stock with the overall market, in this case the S&P 500. Next to that I added their main competitor, Lowe's. On the 5-year chart we see that Home Depot had a 79% return including dividends versus the S&P 500 returning 60%. Lowe's had the highest return with 127%. On the 1-year chart it looks pretty different. Both Home Depot and Lowe's were beaten by the S&P 500 and all stocks had a negative return. And it's pretty much the same story on the 6-month chart. Again, all of them had a negative return. However, Lowe's did best with minus 3.5% return. On the 1-month chart we see roughly the same numbers. Home Depot had a minus 6% return, which is because of the disappointing earnings and outlook. The S&P 500 had the highest return, but it's nearly the same number as Lowe's. So bottom line, Home Depot did beat the S&P 500 in the long run, but underperformed most recently. So does this mean that Home Depot stock is a buy at current prices? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 1, 2.5 and 4%, since I think they will increase the revenue at lower numbers versus the historical averages. Next to that, it's also based on the analysis expectations and the current outlook. Profit margin I'm filling in 11, 12 and 13%. For the free cash flow margin I'm filling in 8, 9 and 10%. It's expected that margins will increase over a longer period of time, as they stated themselves in the earnings report. For the PE ratio and the price to free cash flow I'm filling in 16, 17 and 18, since this is a company with a moat in my opinion. Their margins are way higher versus their main competitors, and they are the biggest company out there. However, you don't want to overpay for the low growth numbers. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, Home Depot is at $295. I hit analyze, and we only see one green number. We have a low price target of $141 to $193, which is quite a big drop. We have a mid-price target of $182 to $242, which is still a big drop. And we have a high price target of $233 to $303. To me, the high price target is the most justified here, since I expect that the company will face a slowdown in revenue versus historical numbers, but not as much as we are seeing right now. I also expect margins to increase a bit, as they stated themselves as well. However, based on the numbers, Home Depot is kinda overvalued right now, since the high price target is around $233 to $303. My final conclusion is that I still like Home Depot. The earnings report was disappointing, and so is the outlook. However, I do think that in the long run they will do great. With increasing their margins and buying back shares, there's still a lot of value with this stock. ROIC is really high, which is something that I really like. On top of that, Home Depot is a great dividend payer, so that's also very nice. However, according to the numbers, they are overvalued, so I'm waiting a bit longer before I start increasing my position. Right now, Home Depot is one of my bigger investments, and I plan to increase my position as soon as the stock price goes down even more, so I can lower my cost average. Right now it's around my cost average, so I would love a big drop in stock price, so I can load up the boat. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.